Central banks bought aggressively first, mainstream money joined in later, and now even companies in the digital asset space are flocking to it. I'm talking, of course, about gold. The precious metal is having its best year since 1979, having surged above $4,300 an ounce recently before pulling back to $4,100 and change today. Other precious metals like silver and platinum have joined in the fun, as have industrial metals like copper. So is the run sustainable? What will run it hot fiscal and monetary policies mean for metals? What impact is the bull run already having on mining stocks, and what will happen to those equities next? Finally, how can you profit as an investor, whether you already hold metals and related stocks or are just looking to get started? I've brought back one of my favorite sector specialists to get you the answers. Joining me for this week's Money Show MoneyMasters Podcast is Brien Lundin, executive editor of Gold Newsletter and host of the long-running metals-focused New Orleans Investment Conference. Brien, welcome to the podcast. Brien, thank you so much for joining me. I feel like since we last talked, so much has happened in the gold market, the metals market overall. So I guess I got to start with big picture here. I mean, major rally, big run-ups towards the end. We're jumping by $100 an ounce plus for a while there. Then we had that reversal after we topped throughout, hit 4,400. And now we've kind of been basing and turning higher again, 4,130, give or take, as we're recording this. What happened? What drove that big run up and the sell off since? And kind of, how do you see the lay of the land here?
Yeah, well, the market, the gold market, and I guess all of the risk asset markets have been pricing in a new rate cutting cycle. The starting gun was essentially fired when Powell did his Jackson Hole speech and essentially conceded a quarter point cut in the September meeting. Market then looked ahead and said, well, maybe we'll get another one. And then it looked at the employment data coming in and said, maybe we'll get another two out of the Powell administration, or Powell Fed, as it were. But then it also started looking ahead to next May. And that's when we're going to get Trump's guy in. And you know what that person's going to do. They're not going to hesitate. We're going to get half a point cuts at least in every meeting. So yeah, that's the market's just pricing that in. And this is a rate cutting cycle that on past experience will last anywhere from a couple of years to 45 years, like the last one did. If you look at the big picture, we spent 45 years of ever lower interest rates, ever easier money, ever greater debts. And really under Powell, we had the first concerted effort to raise rates. Yeah. And what happened? Because the debt got so large, once you just started creeping rates up, the debt service costs skyrocketed because they're so leveraged to the size of the debt today. So the reality now is markets are back to not worrying about tariffs. They're back to their preoccupation, obsession with Fed policy and just hungering for lower and lower rates. And we're in that new reality where the Fed is trapped and they can't really raise rates anyway. So gold is reflecting all of that, I believe.
Got it. And you and I have talked in the past about the monetary policy sort of argument for gold. I found interesting conversations with people like Lynn Alden Schwartzer and the fiscal scenario and the fiscal train, the run it hot kind of trade that also argues for gold. Can you talk about a little bit about that side of the equation and how that matters?
You mean run it hot and not worry about inflation any longer?
Yeah, exactly. And fiscal policy on that side of the ledger.
Yeah, the 3% is the new 2%, as it were. But there's a lot of arguments that we're eventually going to see pass-throughs from the tariff expenses, et cetera. And there's a lot. There are a lot of balls up in the air. People ask me what should Powell do, and my quick answer is run, because there's nothing. They are essentially trapped. They can't address dual mandates right now. If they address inflation, they have debt service costs, and they have the employment issue and the economic issue. If they address the economy by lowering rates, they heat up inflation. They are really in a catch-22, a debt spiral, a debt trap, all of the above. So there's not really much that they can do. Added to all of this is the risk, and I think it really is a real risk that the Supreme Court is going to say, well, enough of all this tariff nonsense,
Mm.
you know, refund the money. And all of a
Yeah.
sudden the deficit and the debt just leaps up in one fell swoop. Probably won't do that, but at the very least, it seems to me very likely that they're going to curtail at least half of Trump's tariff powers. And that is more liquidity in the markets and et cetera. And there'll be, I think, an instantaneous reaction across all risk assets, including gold.
Yeah.
Mike, all roads to me, and granted, I'm talking my book and I have to try to be objective, but it seems to me that either any realistic economic scenario you see going forward is in some way arguably very bullish for gold.
Let me ask you about the government shutdown and if that factors in at all. I mean, obviously, it looks like that's coming to an end as we're recording. We had a record 41, 42 days, whatever it is. Do you get some of the sort of the dysfunction premium going into gold? Is that part of it? Do you think there's any issues that maybe because we had such a long slowdown, Powell may be more inclined to cut? Just curious in your thoughts on that issue.
Yeah, I don't think that the markets, and especially gold, really pay that much mind. I think it's just typical political brinksmanship and games, et cetera. But there is an economic story here. That is, if gold did fairly well and the markets did fairly well or okay while the government was shut down, then I think what they're seeing now and the kind of rebound we saw yesterday is that with a solution to this, all of a sudden we're going to have a lot of back pay coming into the system. So it's going to be a bit of a surge, at least, of government spending, and that has its stimulative effects. And to some degree, I think yesterday, at least as far as gold goes, it wasn't a relief rally that we don't have this uncertainty, but more of we're going to have a lot of money flowing back into the system very quickly.
Got it. I want to ask about some of the credit risks out there. I mean, again, I think back to periods in history, great financial crisis, whatever, and volatility spikes tend to be good for gold. You've had that private credit bugaboo out there. You've had some concerns about some of this fraud and so on going on lending. Is that something that again is a safety premium issue for gold? Do you think that's something that's all that important, or something you'd be watching as we go into 2026?
Yeah, to some degree. I think the uncertainty angle of gold investing is overplayed a bit. I think it comes into play mostly by speculators, mostly over short-term moves. But Milton Friedman said inflation is always and everywhere a monetary phenomenon. I think gold rallies are always and everywhere a monetary issue. And it is faith in the future purchasing power of your currency that is that monetary issue. And that's what really drives gold prices over the long term. So, yeah, a lot of these issues that we see facing is with private credit, et cetera, are on the face of them deflationary. But we do know that central bankers abhor deflation more than anything, and that if we have a sniff of deflation, that they're going to put that fire out with an overwhelming dose of liquidity, and go too far in that direction as well. So that's been the lesson of the last 4 or 5 decades, and the markets know that well. And gold, I think, is a hedge against precisely that, and not all the other factors that might might lead to that central bank response.
Yeah, I want to pivot to kind of the feeling from the floor. You just got done with your annual conference there in New Orleans, but before I do, I saw an interesting story across my desk, and it's about Tether building up this enormous hoard of gold, the stablecoin issuer, $12 billion. It's had that deal with the royalty company in Canada. I find it interesting that a company that's supposed to be on the forefront of sort of the digital gold world and facilitating trading in crypto and things like that is also building up its own reserves, not just in government debt, but in gold. Thoughts on what that says about the value of the asset, I guess.
Yeah, I think it is one of the biggest issues to hit the gold and the mining stock market in years. I think it's the camel's nose under the tent of big time generalist money heading into or being diverted, at least to some extent, into this relatively small sector of metals and mining. Tether decided, well, we like gold, so we're going to come in, and without much forethought, I can tell you, or planning, they are trying to roll up, it seems, all of the mid-tier, at least, royalty companies in the space, and buying a load of gold. They own more gold now than they on value than they do Bitcoin. They are buying, or Tether Gold is buying, about a ton of gold a week. That puts it up with some central banks as far as buying appetite. And they're just one group. In the mining sector, we look the kinds of money that can come into the mining sector from outside of it, from these hedge funds, these institutions, this hot money investments, would just boggle the mind of the typical mining stock investor. We look at a project that might take $500 million or even $1 billion to develop and control really large metal resources in the ground. And there are hedge funds out there that say, hey, we can buy that for only this. We'll write that check. And they can control, whole districts of exploration and development potential for critical metals. I think that realization is coming, and I think it's going to fundamentally transform the whole sector.
Let's talk about that a little bit. I mean, obviously, again, you follow a lot of the junior companies, the explorers in the sector, companies that some people may not have heard of now, but if things go as you expect, they will down the road. What is the deal-making environment like? What is the fundraising environment like? And what are you hearing when you talk to company management and representatives?
Yeah, it's really running hot right now. It used to be really difficult for a junior mining or development company to do a $10 million financing. And now the new $10 million financing is $100 million financing. There are companies out there that obviously have really good projects that smart companies and groups can put their arms around and say, this is really a major discovery, but are still pre-resource. They haven't officially declared a resource that are doing $100 million financings. And there's been so much of that it's obvious that this money is not coming from within the sector. It's not coming from traditional sources, being the major mining companies or even other investment banks involved in the sector. It's coming from new money from outside the sector. And probably that's just a fraction of what's actually going into gold itself. So there's a lot of money that we haven't really gotten a good handle on coming into the sector that seems very eager to get involved. So yeah, it's booming right now. It really is.
Got it. I want to talk a little bit about individual investor sentiment then. Obviously you just held the conference. I'm sure it went very well. The conversations you had with attendees there, I mean, do they think, gosh, this is the second or third inning and I'm going to see you at, $8,000 gold? Or are they like, geez, we've had such a big run up. I'm more of a seller than a buyer here. I'm just kind of curious as to what you're hearing in those conversations.
Yeah, we had a lot of smiles, and rightly so. The investors that came this year that had come last year are all up 2 to 3 times on any investment that they bought from our exhibit hall, sometimes much, much more. So they were all very happy. And then there were some newbies to the sector that said they were looking, said this is the place to be in this kind of a market. But everything's moved so far, so where are the new opportunities? What do I do now? My advice to them, or my lesson to them, is that the moves we've seen, the 2 or 3X's we've seen in the mining sector so far, isn't so much a function of those stocks getting ahead of themselves in a heated market, but just a return to reality because they had been so bombed out before. I mean, we had companies that have resources that were selling for $10 an ounce in the ground or less, and now they're selling for $20, $30 an ounce in the ground. So they went up considerably in terms of valuation. But when you place that against the historical averages that those kinds of projects would typically sell to a major mining company for $150 an ounce in the ground or much more, you can still see that they're still extraordinarily undervalued. So yeah, it's been mind-boggling the kinds of gains we got, because those 2 to 3x gains in the junior miners didn't come over the past year. They came over the last quarter, essentially, or, midsummer to now. So it's been, pretty fast and furious. So we're still getting used to it. There's just still a lot of values out there, and you have to be more selective. The stupid easy money has been made, and what we're looking for now is not the companies that will go up, because really most of these companies are going to go up pretty significantly, stay where they are, go up pretty significantly. So your downside is somewhat protected, but you really want to look for the ones that are going to be the outperformers and really lead the pack.
Got it. What about thoughts on other metals, silver, platinum, things that, silver obviously has done phenomenally this year, but for a while there, it wasn't really keeping up with gold. Now you've seen some of these other metals start to move as well this year. Is that a tail end of the run type environment for you, or you think that tells you that the broadening out is actually bullish in terms of the sustainability of this move?
Yeah, I think the latter. This bull market is unique in the history of gold bull markets. Granting that there've only been gold bull markets since 1974, 75. Then there haven't been a whole lot. But in that limited record, we've never seen anything like this, where it's been central bank buying that has really driven the bull, that has driven the bus. Typically, you have mining stocks and silver outperforming gold much earlier in the process, if not leading gold in the process. And in this case, they significantly lagged. It wasn't until early midsummer that we saw some response in silver, consistent response in silver and mining stocks. So that's kind of where the opportunity lies now. Silver's playing catch up. I think silver is a great opportunity along with mining stocks. Silver does have an industrial component to it that I have really downplayed over the years. I think it's the monetary component of silver that really, factors into its price, or is responsible for much of its market value. That said, the industrial usage of silver looks to, within the next 5 years or so, take every ounce of newly produced silver. So it's going to be a supply constraint, if not a demand component. So I really like silver. I think it's going to outperform gold. Platinum and palladium are, if they ever had much of a monetary cachet, they really don't. They really are industrial metals.
Yeah.
I'm bullish on those, as well as really the entire base metal sector as well, for a number of reasons that are separate and completely separate from the monetary factors that are driving gold and silver.
Got it. And I guess, I know it's not really sort of the main wheelhouse you operate in, but you brought it up. So rare earth, some of these more esoteric type metals, any thoughts on what's going on in that part of the market, and in the, US-China tensions and so on that are driving some of those metals?
Yeah, the rare earth sector has been put off for about a year. So that's going to come back into play. This is a great time to look into that sector. Not an awful lot of opportunities any longer, but they're going to start sprouting up like mushrooms after a rainstorm. You can bet on that. Everybody's going to be the new rare earth company, or want to be. I think that base metals, critical metals, battery metals, they all are facing very steep demand curves and very strict supply constraints. And so there's a story for each of these that is bullish. I would look at these more as opportunities, individual corporate opportunities. Judge a company on its project and not say, oh, I like rare earths, let's drill down into that sector, find the best companies, because there may not be a company in that theme that's better than, gold company X or silver company Y. That said, I do like copper as a long-term kind of a set it and forget it sector or in the industry. And I do like the idea of getting some good copper plays and just forgetting about them for a few years because copper is going much higher.
Okay. Well, one of the reasons we're talking is you're going to be joining us soon for the Money Show Masters Symposium in Sarasota. It's coming up on December 1st to 3rd. Sometimes when I do these interviews, it's many, many weeks out. This is a lot closer. So thoughts or just some tidbits you can share. If somebody comes and they see you speak, what kind of information are you going to be sharing with them?
Well, I'm going to tell them gold's unique role and why it's so important, which is really fundamentally why it's responding like it is. As part and parcel of that, once you understand the role of gold in protecting against future currency depreciation, I'll also explain why it's inevitable that we're going to have much more rapid currency depreciation, not just the dollar, but fiat currencies in general, and therefore why significantly higher gold prices and silver prices are kind of baked into the cake at this point. I'm also going to show specific ways to benefit, specific stocks that I like that should, in my view, will go up considerably as the metals prices go up.
Well, Brien, again, I really appreciate you taking some time out to chat. I know it's been a busy few weeks here for you. If you're watching this, viewers, again, he's going to be joining us at the Money Show Masters Symposium in Sarasota. That's December 1st to 3rd at the Ritz-Carlton. Real nice hotel right on the bay here. If you haven't been before, definitely come check us out. Brien, thanks again for your time. We'll see what 2026 has in store.
You got it, Mike. Looking forward to seeing you in Sarasota very shortly now.
Perfect. Thank you.